What do I do? And, am I missing out? You get FOMO, and then people jump in without even knowing why they jumped in, just because they got FOMO. They didn't do their research. Very dangerous. But that's how people get wiped out. And you see people jump into the crypto market, maybe because they feel FOMO, they haven't researched it, they didn't figure it out. And that's very dangerous. Crypto is not something that you should just jump into without at least getting some help from someone who's been down that road before, teaching you how to properly handle it, how to properly purchase it, how to properly store it, etc. So there are a lot of pitfalls out there right now, but there are also opportunities.
Today's news recap. India's gold market update. Festive buying holds ground in the face of high prices. Gold extended its record-breaking streak into October. Momentum softens post-U.S. elections. Gold continued its rally in October for the fourth consecutive month, hitting multiple fresh highs and closing the month with a gain of almost 5% at $2,779 per ounce. The price rise was driven by event risk and uncertainty surrounding the U.S. elections, along with escalating geopolitical tensions which outweighed the higher opportunity cost for gold on account of a stronger U.S. dollar and higher bond yields. The rally in gold paused post the U.S. election as the dollar strengthened and Treasury yields rose. In fact, both international and domestic gold prices have fallen by 8% since the end of October. Despite this recent pullback, gold remains one of the best performing assets this year, with a YTD return of 177% in Indian rupee terms. At the time of publication, gold in the domestic market has been trading at a slight discount to it. International counterpart 4 since mid-August, reflecting a balanced demand. Supply dynamic following the sharp import duty cut in July. The flow of smuggled gold into the country has almost ceased, making way for official imports. Despite record high prices, consumer buying during Diwali was strong in both gold jewelry and bars and coins markets, and media reported higher footfall at jewelry stores and robust buying of coins via online as well as offline platforms. Promotional events and marketing campaigns undertaken by jewelers to lift sales. Indian gold ETFs continued to attract strong inflows in October, fueled by a favorable gold price momentum and increased volatility in domestic stock markets. The long-term capital gains treatment for gold, which was announced in July, has provided a continued boost as reflected in the significant rise in inflows since that time. Now we'll show you more clips, but first check out our exclusive Black Friday VPN deal. VPNs are an essential way to keep your data private and secure. And with this massive discount, it'll cost just a few bucks. It's a no-brainer, plus you'll get 3 extra months free and a 30-day money-back guarantee. Check the link in the pinned comment, don't miss it.
Alternative. I think that this administration will be much better for the country, but it will ultimately be very good for gold too. Look, when Trump won in 2016, gold sold off hard for a few weeks until mid-December. But following that, there was a huge gold rally through much of 2017. You have a situation where there's been massive short positions by the commercial banks across the board in gold and silver that have been literally bleeding them dry for the better part of the last year. And this was an opportunity on the Trump euphoria to push the price down a little bit to get the algorithms to start selling, which then triggered a pretty large sell-off. And what you're seeing is the managed money that was very long has sold a large portion of that position, which means the commercial banks go the opposite direction. Not only are they covering their shorts, they're taking the longs on the other end. This is to be expected. I was wondering how these banks would ever get out of these short positions, and I think this is an opportunity for them to do that. But in terms of, where this is ultimately going, I think nothing has changed at all. In fact, look, Trump is a proponent of very low interest rates. I mean, he'd like negative interest rates if he could. During his last tenure, he was calling the Fed boneheads for not implementing zero or even negative interest rates. And so when you talk about a situation of lower interest rates and a weaker dollar, that's bad for the purchasing power of the currency. Certainly that's good for the banks, that's good for Wall Street, but it's also very, very, very inflationary. What happens is that lately, as the front end of the market, the bond market, the yield, the rates have been pushed down. The back end's going up commensurate, if not more. In fact, they've lowered the front end by 75 basis points, and the back end is up over 80 basis points over that same period of time. In other words, the 10-year Treasury, which is the most important Treasury. It's the one that is tied to the mortgages. It's tied to the credit cards, to the auto loans. It's tied to leases, commercial leases in terms of real estate. So yeah, I think that this was to be expected, and it shouldn't shock people. And to see it move in the direction that it is going, when you see the stock market and cryptocurrencies taking off the way that they have, again, it's only exacerbating this correction, which is really something that the big commercial banks, I think, are welcoming. Now, at the same time, where this becomes kind of dicey is that you have half of the world looking at these depressed prices as an opportunity to load up on gold and silver at subsidized prices, that being the central banks and the BRICS nations. So, yeah, this is the market exhaling and irrational exuberance, if you will, because while this will be good for the country on many levels, it doesn't change the fact that even if you had a guy like Elon Musk come in and trim all the fat, all of it, and we get into a much more streamlined situation with the government, the Congressional Budget Office, which is a nonpartisan group out of Washington, maybe the last nonpartisan group, has come out and said that by 2031, in just 4 years, 100% of tax revenue goes just to pay the interest on the debt and the mandatory entitlements like Social Security and Medicare. And how do you retain your status as the supreme authority in the world, if you will, in terms of militarily and in terms of financially, when you're borrowing things like military spending, which is discretional? Everything that is discretional would need to be borrowed. Everything other than the mandatory payments for maintaining the interest on the debt and the entitlements like Social Security and Medicare. So it's a situation that we've gotten so far down the rabbit hole. We are so indebted by reigniting the inflation engine, by dropping rates. Again, we're not learning from our mistakes, and we're just papering over the same problem. So I'm very optimistic, at least in terms of what it means for the country to go back to some form of sanity from a standpoint of culturally. But in terms of financially, no, I think that gold and silver will ultimately, as that debt burden gets worse and worse and worse, and we see this debt bubble pop, which I think it will. I mean, you look at the bank in Lindsay, Oklahoma, which I think was a test case that failed.
In today's news recap, higher supplies to the UK lift Swiss. October gold exports from Switzerland rose in October compared to September due to higher supplies to Britain, but were down from a year ago as high gold prices kept deliveries to China, and Hong Kong subdued Swiss customs data showed on Tuesday supplies from Switzerland, the world's biggest bullion refining and transit hub to Britain, in October reached the highest level since June 2021. According to the data, London is the world's largest center for over-the-counter trading of gold. This year's 27% gold price rally, which took spot prices to a record high of $2,790.15 per troy ounce on October 31st, has been affecting physical demand in China, the world's top consumer of the metal. However, gold exports from Switzerland to India, the world's second-largest gold consumer and a major importer, rose in October from September. Amid festival purchases, before we jump back into the clips, check out our exclusive Black Friday VPN deal. A good VPN is essential for keeping your data private and secure. And with this deal, you're getting top-tier protection for just a few bucks. It's fast, reliable, and a no-brainer at this price. Plus, you'll get 3 extra months free and a 30-day money-back guarantee. Check the link in the pinned comment. Don't miss out. The script emphasizes the dangers of jumping into investments like cryptocurrencies or markets due to FOMO, fear of missing out, without proper research, as it often leads to significant losses. It stresses the importance of learning from experienced individuals to handle assets properly, including storage and management. The broader financial discussion highlights that gold has performed strongly despite recent pullbacks, driven by geopolitical risks, the U.S. elections, and market uncertainty. While gold has paused after hitting record highs, it remains a favored asset for central banks and investors seeking stability. Silver is also gaining attention, expected to outperform gold in the long term. Concerns are raised about the sustainability of current market trends, particularly in stocks and cryptocurrencies, amid rising debt and inflation. The U.S. faces financial challenges with escalating debt burdens and potential issues in the banking system. Despite short-term optimism, the long-term outlook suggests a shift towards safer assets like gold and silver, with potential implications for global monetary systems, including challenges from BRICS nations and their growing interest in gold-backed currencies. Investors are advised to stay cautious, focus on fundamentals, and consider diversifying into precious metals while being mindful of risks in other markets.